Welcome back to another Stock Market Open live stream. Today, we are, as usual, going to do the general watching of the stocks that just don't go down. Like in this case, Nvidia up 14% yesterday, up another 2% here in pre-market, 20 basis points on AMD. Let's take a look at Super Micro, good old server rack company. Boy, people get mad when I say it, but they don't realize that is what it is. Somebody sent me a video yesterday. Thank you, by the way, for sending me an email. But anyway, somebody sent me a video like, Kevin, this video changed my opinion of Super Microcomputer. And then I watched it. And then I'm like, this is an infomercial on what we've already been talking about. And it's a matter of looking at the 10K and then going, here's what the company does. And then looking at an infomercial on it. So it's very easy to take a flashy video. Look at all the integrated solutions we have. We plug chips in together for you and make it easy to buy a server. That's great. Not saying they're not printing money right now. The question is, how long will it last? So, of course, that's the giant question in AI. And there's no doubt about the money printing that is going on at a company like Nvidia right now. $26 billion of free cash flow. So you just can't question that because even if growth were flat, the numbers are so great. The question is, what happens when margin finally goes away? Well, that's potentially a whole different story once these AI chips become a little bit more of a commodity. Supply comes into balance. We expect supply and demand to come into balance next year. And certainly, as there always will be, competition will put some form of a ceiling on margins. But with that said, let's take a peek at some of the other pre-market movers. We did have the Lunar landing yesterday, and so the stock related to Lunar, the Lunar landing, ticker LUNR, is up 41% in the pre-market. And there was a moment yesterday where there was fear that the Lunar lander had actually failed. And so you could see these relatively large candlesticks to the downside. The stock rotated as quickly down to 7% as you would almost expect a sort of momentum-driven stock to do so. And this says essentially the staff had suggested, hey, we've lost communications with the device, or we haven't heard from the device yet, whatever, right? And I think it's so interesting to think of how quickly the market started going, oh, they lost communications, it's over. And there was quite a lot of doubt. I mean, it got to the point of, yeah, we're gonna have some satellite dishes in England, I think it was, start trying to do a sweep to see if we could hear anything of our lunar lander. It's kind of like, huh, you really lost comms with it? Okay. But anyway, so apparently comms were reestablished, and you can see what happened after that with the stock, straight up. Now the question is, what kind of ongoing momentum is this stock likely to have? Who knows? It is obviously very good news that they were able to pull this off, so good for them, and congratulations. Then in pre-market here, you've actually got Rocket Mortgage up 5%. I honestly don't think anything happened at Rocket Mortgage other than there was a lunar landing and there was a Vandenberg rocket that took off yesterday, which I watched in person. Thanks to the team, Mike, shout out. It was pretty cool. The company did have earnings yesterday. Okay, in fairness, their revenue actually came in a lot better than expected. Revenue of $885 million versus the expectation of $770 for Rocket Mortgage. How interesting. I wonder how they were able to pull that off. And I wonder what their income and expense actually looks like. Rocket Mortgage, investor relations. Let's find out. Events, presentations, financials, filings. Let's see if they filed it yet. They have an 8K. Oh, yeah. Okay. So Rocket Mortgage had gain on sale of loans, 430 mil. So they've sold a lot of net gain on sale of loans. So they've sold a bunch of loans, made $430 million on selling loans, and then servicing loss was 10 mil. but a lot of that has to do with the change in fair value, so that went straight down. Oh, yeah. No, they lose money like crazy. They lost $232 million. It's better than the $492 million they lost previously. But then again, some of that has to do with sort of just the change in fair value of the loan servicing rights. That was about 357 of it. If you didn't have that, I guess technically you'd have about $120 million of income. That company is one of the hardest to understand how they do this. They give themselves hundreds of millions of dollars of either income or expense in the change in fair value of mortgage servicing rights. It's like crazy. But yeah, they pull it off. Yeah, and then we also heard about the Reddit IPO, which is quite interesting. And Sam Altman owning a good chunk of the company, which I thought was fascinating as well. Sam Altman owning, I think almost 10% of the company, somewhere in the 9% range. And the company, I'm not sure if this is a surprise to you or not, but the company loses money. Reddit brings in about $804 million, which honestly I'm surprised they even bring up that much money. That's in 2023, they brought in $804 million. Their cost to revenue was only about 111. That's going to be like server stack or whatever. But then we've got R&D. R&D for Reddit, $438 million. Sales and marketing, $230. General and administrative, $164. Wow. And that gets you to a net loss of $90 million. Probably a lot of it's stock comp. Let me see if I look at... Ooh, cash flow. Look at that one. Oh, they talk about trending users. Try to paint some fancy graphs over here. And how there's growth, blah, blah, blah. Yeah, wow, this is an interesting-ish one. Cash flow. Free cash flow. Oh, negative 100 mil. Okay. Oh, that's unfortunate. Really? Net cash provided by operating activities, negative 90. Oh, yeah. Even when you add back in stock comp, maybe there isn't because that much because it's not public yet. Yeah, I mean, you could still issue stock comp. Wow. Never mind. Reddit loses money. Did a lunar land? Yes! The lunar lander landed! The CEO, 193 mil? Did not know that. Is that true? Total, oh yeah, there it is. CEO, Stephen Huffman, received stock awards of $193 million. Jennifer Wong got $92 million. And she's the COO. And then the CFO got $6.5 million. Okay. Wow. I wonder when those suckers vest. I should say the following. Wait, that was the compensation that was paid in 22 and 23? Are you serious? Oh my gosh. That was just 2 years? Yeah, most of it was in 20. He paid $332,000 of stock comp in 2022, and then $193 in 2023. Oh. Wow. On top of that, the CEO has a base salary of $450,000, with Wong's base salary at $600,000. And the CFO is at $624,000. Oh wait, no. It was increased again the next year to $550,000, $650,000, and $647,000. Okay. Wow. Those are some crazy numbers. Just shoveled it all in 1 year, I guess. That's wild. So anyway, so we looked at Rocket Mortgage. We looked briefly here. We looked briefly at Reddit. That's pretty remarkable. And then, of course, if you don't want to look at anything else, you could just look at green and be here at Nvidia. Oh yeah, I thought it was up 16%. That was weird. That was glitched at 14. Anyway, yeah, 16 yesterday, 2 today. What's on the downside? Bolero, Rivian down another 2%. It was down 25% yesterday, actually. Ouchies. Yeah, full 25%. That it did officially end up at the lowest it has ever been. Ouch. It's so tough right now, I would say, to really be in the, the interest rate sensitives. It's very difficult. I was talking about to the team about this yesterday. I go, you'd be better off begging for a recession with the interest rate sensitives. In fact, if you didn't have the AI boom, maybe GDP would have come in lower, for the last few months. And you might have been closer to a recession, and you would have already had rate cuts. So how crazy is that? That the not having a recession is actually worse for the interest rate sensitives because, well, then of course naturally rates stay higher, and then in a recession, yes, rates come down. Not everybody suffers, and so it's kind of interesting. Now, but then again, you always have to be careful what you wish for, and so I wouldn't wish for a recession. I think that would end up being worse. But it is interesting how a certain segment could actually probably do better. Nvidia is expected to be at a $2 trillion valuation pretty soon, which is pretty wild. Then you've got, let's see here. Okay. Oh, this morning I posted a house hack video on the main channel. It actually announces the new Reg D, but it also goes into how much money house hack made. So if you want to see it, go check it out. So far, we break down some of the average profit we're making on wedge deals. These are gross profit figures, of course. And if we get through the first cycle, we actually think we'll be net income positive this year, which is really exciting. But our average wedge of single units so far is $132,000 a wedge. The goal was $100K. And I always told the team from day one, some deals are going to be better, some deals are going to be worse. Oh boy, that ended up being true. We're at about 132K on average, which is really cool. And maybe it's the inflation-adjusted wedge. It's now 100. The goal is now 130. So, yeah. Anyway, so then we have. Let's get into some of the other news. Let's go to Wall Street here. So you can see that on the main channel. Okie dokie. So lots of Nvidia everywhere. All right, we know that. We have Meta staff found Instagram tool enabled child exploitation. The company pressed ahead anyway. Yeah, boy, they get rough press regularly, but the stock doesn't care. In fact, remember, they really pushed forward with valuation. I mean, substantially here. Look at this. This is really, really incredible performance by Meta. So they don't care. Oh, poor Neo. It's under $6 here. House hack tattoo. Yeah, no kidding. No kidding. Let's see here. Where'd you get the term wedge from? Well, I mean, I think it was in 2017. I was sort of regularly explaining how, there's the market value of a property before it's fixed up and the market value of after it's fixed up. And I would always kind of say, like, there's this spread between the two. And I actually think it was a commenter on YouTube where they either left a comment or a live chat, and they were kind of like, they said, oh, so it's kind of like there's a wedge between the two. I'm like, huh, yes, it kind of is like that. We've already actually talked about that. How much is the CEO of House Hack getting paid? 0. I have been paid 0. So, let's see here. It would be interesting to look at Nvidia valuation how it compared to Cisco. We had that chart yesterday. Oh, I guess you mean the valuation, not necessarily the stock performance. Yeah, that would be interesting. And not something too easy to do live, but that would be interesting. No press is bad press for Meta. Yeah, no kidding. Square is up 16%. Is that true? Did they just report? Let's see. I think Carvana was up like 16% in after hours too. Yeah, Square and Carvana. You know, after they burned their bondholders, their stock has been straight up. It's been remarkable. 26%. Yeah, once they burned their bondholders, that stock just absolutely took off. But let's look at Square. I really hate how the ticker is Square, but the company's name is Block. I don't know, it just makes it a little hard to search for these things. We don't have any devs right now. I'm assuming we trial devs for like a week, and we see who fits out. So HouseHack doesn't have any devs. I'm assuming the employees are all paid. Well, the employees are all working at HouseHack, so of course the employees are paid. Otherwise, they wouldn't be there. But we talk about that in what we do as well. But yeah, of course they're paid. So Square, also known as Block earnings. But yeah, I mean, if you have more questions on HouseHack, feel free to ask away. And then remember the full HouseHack video. It's an explanation, earnings numbers, and then what's it called? It's a, you know, we opened up a fundraise again for it as well. So many people were emailing us saying, Kevin, please. Like, okay. All right, so Q4 Cash App, monthly transactions at 56 mil. The expectation was 56.03, so a little miss there, but adjusted EBITDA comes in at 562 versus 447. Adjusted EPS comes in at 45 versus 59. How is that back? That feels backwards. So they're saying they beat on adjusted EBITDA, but EPS, I mean, okay, I have to look at the statement on that. Cash App revenue beat. If I still wanted to invest in house and horseback, I love that typo. Well, yeah, it's open now. Go watch the video on the main channel. Horseback, I love that. Block. Let's see here. After adjusted EBITDA outlook got boosted. Oh, it's the Q1. Adjusted operating income of 1.15 billion saw 875. Oh, are they pumping this with crypto? Or why? How are they all of a sudden getting more guidance? Let's see. Okay. Let me get to Square Investor Relations. Let's see what we got here. So, where's their press release? Why do they make it so hard? Earnings call. Block announces fourth quarter earnings result. You click on it, and then it says, click on this other link to get there. Oh, this is so annoying. But then it's just a giant circle. Oh my gosh. Okay. So there it is. Annual 10K report. Okay, good. So let's see where Square is making some dollar hollers. Where is it? Square, Square, Square. Okay. Here we go. Stock-based comp for 2023, almost $3 billion. Net income, negative $21 million. Bitcoin remeasurement. It's negative 207 million. So, are they going to remeasure that positively in Q1, and that's why they're going to beat? Bitcoin remeasurement. See, there's some funny stuff going on there. Cash flow activities, net cash provided by operating activities. Oh, $101 million for the year, though. $101 million for the year? Compare that to Nvidia. This is why the stock is so high, right? They actually do make a lot of money. Like, from a fundamental point of view, it's very hard to poop on Nvidia. The question is, how much crazier does it go? And the answer keeps proving to be yes. But if I divide how much money Nvidia makes per week, just to compare, Nvidia per week right now is making $500 million. So Nvidia makes more money in free cash flow in one day That Square makes in a year? No way. Hold on. Now I gotta look at the Nvidia investor relations just to verify that. Oh my lord. It's like, why buy anything else? Just buy Nvidia. So, it's remarkable. Okay, here we go. Let me get to Billy's. Where's the cash flow? Let's see. Cash flow. Cash flows. Okay. Oh my god. Cash flow from operating activity. Wait. Okay. Yeah, that's... There it is. For the 12 months ended January 28th. That's my birthday. $28 million. Oh, I'm sorry. I thought it was 26.1. So $28 million of cash flow. Nvidia right now is generating $538 million of cash flow in a 1 week period. That's $100 million of cash flow a day. They do what Square does in a day. That's funny. Germany GDP reflects signs of recession. Yeah. Yeah. Let's see. Their second GDP was negative as well, I want to say. Let me see here. Germany slashes 2024 growth forecast to just 0.2%. Yes. And then their last report was negative 0.3 Q over Q. A week ago, Germany is doing drastically bad, the country's economy minister said. Wow. Jack, Kathy Wood, and Elon Musk talking in one video was the top of the bubble. Oh, ouch. That probably does roughly align with that. Matt Ward, my investment in HAC doubled faster, House Hack doubled faster than any other investment I made. Oh, well, thank you. But time to get those wings. Wingstop? Wingstop. Can you believe Wingstop after, like, we were slamming its financials the other day? It was up like another 16%. Like, some parts of the stock market are completely devoid of fundamentals. But that's okay. The stock market usually doesn't move off fundamentals. At least not in the short term. Let's see here. Dell. Dell was up like 9% yesterday. Oh, okay. 7.8%. That was pretty incredible. And, yeah, we were looking at that one fundamentally in the course live yesterday as well. So, it's pretty good. Okay, so, wow. Well, that's a lot of cash flow at Nvidia and not so much at, what's it called? Square. But, I mean, still a decent amount. So, okay, cool. Let's see what else we have here. Okay. So, let's see here. Oh, I think before I hook this up, I probably want to go get a thing of coffee. I went to go grab my coffee, and then somebody unplugged the coffee machine, and I'm like, no, life is unplugged. How could you do that? Because now it's not preheated. the little problems when you start running out of outlets because there are 4 tiny children in the house, plus 2 others, plus 1 still in shipment. Oh, your shipment has been delayed. Oh, she's getting better though. So we got to fatten her up for her last surgery. Put her back together. She'll be all right. Anyway, so well, gosh, what about some caddies? Let's see what we have here. I used the StreamYard cup this morning. Thanks for that. What do you think about GDP next week? Yeah, well, let's see. GDP next week is expected to come in at 1.5% for the, I think that's the Q4 second release. And then GDP annualized is expected to come in at 3.3. Yeah, I mean, I don't think that's unreasonable. I do think AI really helped boost, you know, boost GDP substantially, which I'm not mad at. Like, I think AI is awesome. But yeah, it probably did mean rate cuts got delayed. And that might continue for a minute. So, and we got our service PMIs yesterday. So we looked at that. Was a tiny miss there on the February service PMIs yesterday, which I thought was neat because, you know, everybody was worried about this explosion in services in going into the February CPI report, which, you know, we're not going to get February CPI for what? I think March 13th or something. CPI schedule of releases. Let's see. Next caddy. CPI is March 12th. And then how about BLS jobs report? That is March 8th. Wow. So you get a March 8th and March 12th. So that means the first Friday of this year must be on, must be like the first of the month. Or it's February, which is a shorter month anyway, but it is leap year this year. Yep. March 1st is a Friday. So they're going to buy themselves some more time to get that report done. And so the report will be out a week later as opposed to the first Friday. They do that. That's normal. You know, it takes time to rig data to get... Okay, sorry. I'm kidding. I got to get coffee really quick. Hold on a second. I'll be right back.
If I had to own one just from a risk-reward basis, I'd probably go with Meta. It was my top pick, one of my top 5 picks last year. The stock, you know, obviously tripled last year, almost tripled. And if you look at it this year, it's also doing well. And the reason why I like it is they're using AI to help drive content recommendations so people are more engaged with the platform. They're using it to drive better ad monetization. And if you think about this year, your segment before was talking about the election coming up, is going to be the most hotly contested election we've ever seen with tons of advertising. Right. And that's really going to benefit Meta during that period of time as well.
I'm so sorry you had to bear through that. Just kidding. No, I don't horribly dislike CNBC. I actually like CNBC. So, okay. Let's take a peek here. What else? So, okay, we are going to see here. Biden issues new sanctions on Russia in response to Navalny death. Stellantis gives 56 pay raise to chief. It looks like their CFO. Okay. I think Stellantis has outperformed Tesla over the past year. I think actually everything has outperformed Tesla over the last year. So, boy, must feel like a loser to be an investor in Tesla. Oh. Anyway, Stellantis. That's funny. So, well, at least recently, because we know Tesla did have a double in 23. Well, roughly. Actually, I don't even know if you don't actually have the double anymore, because you were down at 103 for a hot minute. So that would be 206, and you're below 200 right now. That's sad. Yeah, where is it? Tesla. Yeah, and you're down like another percent. I think what's happening is I think a lot of people who invest in Tesla are selling their Tesla and they're investing in Nvidia. I highly believe that. So, anyway, let's see. The U.S. has issued more than 500 new sanctions on Russia in response to the death of opposition activist Navalny. Navalny. The measures announced by Biden on Friday are aimed at punishing human rights violators and slowing Putin's war machine. Yeah, we've already figured out that sanctions just don't really seem to be functioning. But these sanctions include companies in India and China that are accused of aiding the Russian war effort. All right. Stellantis chief executive Carlos Tavares. I'm just not. It's too early for this. Pay rose 56% to 36.5 million euros in 2023, making him one of the industry's most highly paid CEOs. Yep. There's one here in America that just got paid negative $55 billion to be CEO. So I guess so. Okay, so we talked to Reddit IPO. Which also had some pretty crazy comp on there. We talked briefly yesterday about how Google had paused their pictures, their AI search generation pictures. Oh boy, a little quiet today. What is this? Sanctions worked on Iran. It just takes time. Yeah, I mean, let's be real. I mean, obviously there are inconveniences that come with sanctions, right? The question is, are they strong enough to induce a difference of behavior? And I think that's a little bit more questionable, because the answer to that might be not necessarily. Okay, see, look at this. The Economist. Do not expect America's interest rates to fall just yet. Yeah. Well, I mean, yesterday we had one of the Fed members talk about how we could wait a few more months and not cause damage to the economy. I think that I think the Fed is very clear in destroying March, and the market isn't even really pricing in March anymore. Now it's just turning into the question of, is it going to be June or May? That's the question. As in, let's see here. The question is bond markets, the Fed. Over the past 3 months, core consumer prices have risen at an annual rate of 4%, up from 2.6 in the 3 months to August. Yep, good little peak-to-peak comparison there, Economist. But anyway, then they go into the history. If interest rates do not fall, there might be some nasty surprises on Wall Street too. The stock market appears to have barely noticed the danger that monetary policy will be in. The danger that monetary policy will stay tight this year. Well, I think that's true no matter what. I mean, think about 2024. Even if you lower rates 4 or 5 or even 6 times, you're still in a 4 handle. So rates are still tight. Now we might be importing deflation, but might be a little while for us to really get to an exciting state of rates again. Okay, so then what else? Let's take a peek pre-market here quickly. Oil technical analysis. Oh, I haven't done an oil technical analysis in a while. Oh, look at that. You've actually got Lunar selling off a little bit in the pre-market. Wasn't it up 40%? Yeah, it was. Just dropped a little bit. Dell up now 1.3%. They did very well yesterday after their Nvidia shout out. I remember listening to that live, and I'm like, wow, how much do you have to pay to get a shout out from Nvidia, while you have a public site? It's like the best thing that could have happened to Dell. It's pretty remarkable. Yeah, Supermicro dropping about 3.7 here, along with Rivian. Tesla's over there with Coinbase. About, what is that? Tesla's at, oh, well, there it is. Just update a little bit. That's weird. Anyway, 0.7. Coinbase down about 181. So that must mean BTC has dropped a little bit. Let's take a quick look here at BTC. BTC 51K. I think there's probably a way. We don't right now, but we just posted the house hack income and fundraise video, and I think there's probably a way you could probably fundraise with crypto. It just wouldn't be that hard. The biggest thing is we'd have to match people's wallet addresses before they sent money, or use like Coinbase Commerce. So I think there's a way to do that. But anyway, yeah, that was something that was on my mind. I think that I don't know how popular that would be, and then obviously there'd be an amount that you would just have to sell of that to cash anyway. But yeah. Anyway, okay, good. So let's see. I'm gonna pull up some suit pieces here, but we're gonna grab some commentary here for a moment.
You know, and that's what's going on. And I happen
Wait
to think Kim Cheney's very good. I'm just saying that it seems like it's out of nowhere. But he's been begging people to at least listen to what he was doing. Begging people. And now people want to beg him. And good luck.
One thing that people started to put together yesterday was the activity in Nvidia, meaning their business activity, and financial conditions, meaning the more they go, the hotter economies run, and the more we get commentary like the Fed gave us yesterday.
Well, look, I think that if you're going to do wholesale replacement of all the technologies in the world, basically going from CPU, which is Intel. And remember, at the beginning, they talk about, listen, Moore's Law is dead. Well, it's Gordon Moore. He really was the creator of Moore's Law, and he started Intel, which is that every 2 years things double and they go down in size. That's over. There's no longer advantage. Pat Gelsinger will completely say that's totally untrue. I have said over and over again how nice Pat is. I do believe that what's going on here is a recognition that maybe everything that we have, everything has to be replaced because it's 20 times faster, it burns less hot, and it has a better return on investment. So let's just rip the stuff out. He even talked about how right now all the big companies are they're changing the way they depreciate because they don't want to buy more CPU. Now, the great thing for those who are thinking, well, wait, is this game, set, match? AMD has they have a different and good.
I'm just going to jump in. I don't know that that's necessarily true. If you have data centers, I think you keep your data centers to some extent. Of course, you're going to upgrade as you're upgrading to the latest stuff. But do you need artificial intelligence GPUs necessarily for data storage? Probably not. For data analytics and inference and elsewise, inference and trading, of course. But that's the whole stack that's sort of being built out. So I'm not convinced that you have to go through and replace all the old. You certainly rebuild. You're building a whole new, without a doubt.
Nvidia killer. And Nvidia's like, well, bring it on, man. We need more chips. I mean, when I would mention, I say, hey, I understand Google as an Nvidia killer. I said, oh, we hope so, because we can't meet the demand for Google. I mean, people don't understand anything about these guys because they are so not masters of the universe. They're like, I don't know if you watch Masters of the Air. They're clearly not masters of the air. These guys would be master of the universe. They want to be master of that great buffet at the end on Friday night. That's what they're master
So
of.
you're talking about a gut renovation of the entire IT stack. But the question then is, how large is the halo effect going to be? Do people buy Palo Alto off of this? Because despite some of the disappointments in other areas?
I think that what will happen is, and go back to the Fed, I think that if everything changes, you don't have enough people in our country. You don't have enough cybersecurity in our country. You don't have enough hardware in our country. Hardware meaning steel. If you're going to do every data center over, but you're going to have to. And one of the things that Jensen told me years ago was the largest market in the world is manufacturing, and we're going to basically change the way people
You mentioned that yesterday, yeah.
That's a $40 trillion market. So there isn't anything that it can't touch. And you go over just every conference call last night. I mean, it was Square, Intuit. You go over bookings. They're all just talking about, look, how much we have in terms of AI. And they're early adopters. Everybody we have is early adopter. And yet they're nothing because of the stuff that they still have CPUs. Now, the great thing about ARM, by the way, which you say, oh, well, hold it, you like ARM, that's CPU, is they work very closely with Nvidia. That's Renee Haas, who is work with Jensen and is such a great man. I wish we didn't have that damn SoftBank lockup, because I would just say, hey, here's your suite.
Yes.
You buy that, you buy ARM, you buy Nvidia, you can buy AMD if you want to have a second source. And
right.
I say that because Lisa Su's so good. And will remind me of their
He loves them.
Listen, we've got something better than the 200 Never say that.
Meanwhile,
200 is really big.
Meanwhile, Jim, this morning your comments on social media talk about what you called a vibrant middle class, which is getting reflected in Live Nation and RCL and Carvana and even Hyatt today.
Look, Live Nation, do people like Rapino? I've liked Rapino for a long time, since Benioff introduced me to him at a party. Benioff has introduced me to everyone at a party, and he stayed to 3 o'clock for my wedding, just so you know. It was like, at 3 o'clock, he said, where are we going? I was like, me and Lisa and him. He said, I don't know, I want to go home. He goes, oh, come on, you guys. Live Nation was an amazing conference call, because what are they talking about? He's talking about record level.
All right. Live Nation, record level. Got it. Yeah, again, I don't know. But let's take a look at some of the good old updates that we have from the suits. So we've got Goldman Sachs this morning. Let's see what they think. So USA pushing the first rate cut back to June. Now expecting 4 cuts in 24 and 4 in 25. Nice and slow. Comments this week from Fed officials and the minutes to the January FOMC meeting suggest the first rate cut is unlikely to come as early as our previous forecast of the May meeting. We've therefore dropped our forecast of a May cut and now expect 4 cuts in 2024 versus 5. So June, July, September, December. It's interesting. I want to see the dates of these meetings. Fed FOMC meeting schedule. I have met Jim Cramer in person. Okay, June, July, September. You see, they missed the November meeting. I don't know if they did that on purpose, but I don't know why you would predict a skip in November. That's a non-SEP meeting. That's interesting. Okay. Governor Waller says that he is going to need to see at least a couple more months of inflation data before I can judge whether January was a speed bump or a pothole. Oh, I actually do like that reference. That's a good one. Okay, let me do this really quick. It's not letting me. I need to fix that. Sure. Ah, there we go. Yes. So, come on. There we go. Okay. He's going to need to see at least another couple more months of inflation data before I can judge whether January is a speed bump or a pothole. And that delaying rate, that was it. That was what I heard yesterday, which I pitched out. But it's this idea that you could really delay these cuts and not hurt the economy. That's the question, because obviously if you did, you could just cut rapidly, right? This is a mindset that the Fed has. Fed mindset, we can always cut faster, but it's very difficult to re-hike after you've cut. So I think that's very interesting. Yeah, that's definitely something to pay attention to. Okay, comments from other Fed officials this week in the minutes of the FOMC January meeting have also suggested the first cut is likely to be delayed until June. I didn't see that in the FOMC, but there was this I guess there was a fear about acting too early, but that didn't imply June versus May. Kashkari, a little bit further away before we start lowering rates. Bostic, start returning our policy to a more neutral stance in the summertime. So what months are technically considered summer? Isn't that, I think, August, June, July, right? That's technically summer. Because spring is March, April, May, right? Summer months. And then Feb, Jan, December is winter? I don't know. Oh, yeah, here. June, July, August. Well, it's the end of June, so it actually goes into September a little bit. Wait a minute. What day does summer actually start? Oh, summer technically starts. How interesting. Summer technically starts June 20th this year. So it actually is the end of June, July, August, September through September 20th. That's weird. Okay, so there is no meeting in the summer at the Fed other than July and September. That's it. Those are the only summer meetings. No. So we're gonna write that down. July or September. RIP. Yeah, June technically isn't even the summer. It's still spring. What a rip. Preference to wait somewhat longer appears to reflect two changes in the Fed thinking. First, the strong activity data have piled up. Fed officials have become less concerned about the risks of keeping the funds rate too high for too long, which they've emphasized, and appear to have shifted their view to the largest risk from past rate hikes being behind us. Ah, that's an interesting line. Largest risk is behind us, and the cuts are therefore not urgently needed. Ah, see, this has to do with the tightening concern. You know, what happens if, you know, you don't have to be worried about over-tightening because, well, frankly, you've already got most of the tightening behind you. Ooh, this is a very interesting piece by Goldman. So Goldman basically makes case for June cut, possibly July, and yeah, I mean, really, you need something to break, right? To really push rates down quickly. What's remarkable about previous rate cuts is that previously the Fed has cut rates very slowly, and there's usually something where they're like, oh God, and then they cut rates very, very rapidly. I think that's very interesting. But yeah, it's going to be a minute here. What do we got over here? Oh, this is the sanctions report. Let's see if there's anything new here.
Opposition leader Alexei Navalny. And overall, guys, it's still a big question of just how effective these sanctions are going to be. But the goal here is to cut down on the evasion of the sanctions that we've seen so far, to increase costs and reduce revenues. Back to you.
Yeah, okay, because we touched on this a little bit this morning. It sounds more like almost an adjustment because the last sanctions have been so, dare I say, ineffective. I mean, they certainly don't appear to have helped at all in policy. But, yeah.
In a way to be able to stop this because obviously the sanctions have been meaningless. And when I say meaningless, I mean,
exactly.
Like, wow, it stepped up the Russians' game. You know, there's a lot of people who are beginning to remember what the Russians were like in World War II. They were, they're ingenious when it comes to stretching their resources. So I think that we're not recognizing this is about finance. That's not what's going to stop them.
Yeah, big opinion piece on the tape this morning looking at history where you thought the Russians were counted out.
Right.
And they managed to find some well of resilience and reassert their threat over the longer term.
Yeah, in 1942 in Ukraine.
Yeah.
I mean, you had operations where they captured 600,000 Russian soldiers and 3 million Russian soldiers murdered. And it didn't matter. 28 million soldiers and civilians died in the World War II, and the Russians kept coming. So, I mean, we have to start realizing who we're funding Ukraine. You have to start realizing that the Russians they have never played by the rules. They're willing to lose. It seems like there's almost no unacceptable laws. So you do these sanctions, like Putin's just like getting money? Money? Was Stalin money? Money? That doesn't mean anything.
All right, let's pull off here. So, yeah, a little bit there on the 500 new sanctions. I feel like it's meant to sound like a lot, but again, I'm not so horribly enthused about the future there. Okay, so okay, there we go. Just threw that quickly on good old eHack, which keep in mind we've got that new video up on I threw it on the main channel. It's just sort of like a quick little. It includes profit and a little bit more of an explanation on house hack. If you wanted to see that, it's on the main channel. And the fundraise starts now through June 30th. So there's some time, but that way you can take a peek at that. I wanted to look at the Carvana financials a little bit right now. Carvana, investor relations. Carvana, remember what they did is they did this remarkable thing where they were able to burn their bondholders substantially. And when they burned their bondholders basically at the bottom of the stock market, when it was expected that they were going to go bankrupt, the company was able to find its footing. When they found their footing, they actually recovered and started doing actually somewhat decently again in terms of, well, certainly share price performance, but their risk of bankruptcy diminished very rapidly when they had essentially that cash infusion. So if I go to now the actual performance of the company, let's find out. Okay, so we are at, here we go. No, that's not it. Here we go. Sales and operations. Net sales and operating revenues. For the year, they ended up having $10.7 million. That's it? Gross profit? No, that's has to be that. Oh, sorry, that's 10 billion. Yeah, then that sounds more right. Was that right? Wait a sec. It says it's in thousands. So 10,700. 10, 7, 7, 1. Add 3 zeros. No, that's million. What am I missing here? Oh, in millions, except for in share numbers. Oh, okay, it is 10 billion. Okay, that makes sense. I saw it in thousands, and I'm like, that doesn't make sense. That's millions. Well, that's way too low. Okay, 10 billies in net sales and operating revenue. Cost of sales, 9 of that billion. Then you get down to gross profit of about 1.7. Then you have SG&A of 1.7. And then you have interest expense of 632 million. Holy crap. Now, they did take a gain on burning their bondholders for the annual report, but if you didn't have that, you'd be negative $400 million. These are bad. The financials are still bad. No. Hold on. Let me see here. I want you to see it. Carvana. I feel like when I just, I read it off. I'm just, sometimes I just don't want to go through the effort here of pulling it up. But I do think there's some benefit to you seeing this. It's on page, I have to get to page 77. And tell me if I'm wrong here, okay? 77. I don't think I am. But I've been wrong before. And I will be wrong again in the future. I just try my best. So, look at this. Here's 2023, okay? So we have net sales here of $7.5 billion. We have wholesale of 2.5. We have net sales in total of 10.7. Then we have operating, or gross profit rather, of 1.7. G&A, 1.7. Okay, that's negative, right? So you're losing money. You're gross profitable, but after OPEX, you're negative. Which, worth noting, I talk about that at House Hack. We talk about how we have gross profit, and if we finish this cycle, because we've only been operating for about 175 days, if we finish this cycle, there's a really good chance we'll be net profitable this year, which is very, very exciting. And that doesn't even include treasury income, which is crazy. Somebody had a question about that, and I'm like, oh, I didn't address that. That's a really good point. That does not even include the treasury income, which is great. Anyway, okay. So let's see here. Gross profit 1.7, G&A 1.7 again. So you're negative. And see how you have interest expense. So they're not making money off interest. They're spending money on interest, right? And then what do you end up with? That burning of the bondholders right here. They took that as a gain, and then they said, "Oh, look, we made net income this year." No. So actually, let's see what their cash flow would be. See, but then how do they pull that off? Cash from operating activities, 803. Originations from financing, proceeds from financing. I don't know. Vehicle inventory. Oh, because they sold inventory. They have negative inventory. Okay, that makes sense. But there's a limit to how much you could reduce your inventory, which we can see at the balance sheet. Oh, wow. Yeah. Look right here. So this is vehicle inventory. Remember it showed they had like $800 million or whatever of cash flow? I'm like, where'd they get $800 million of cash flow? Well, then I go look at the vehicle inventory, and look, it's basically right here. In 22, you had 1.8 billies, almost 1.9 billion. Now you're at like 1.1 and a bit. So They're just liquidating is what they're doing. How interesting. Wow. Okay. So, what else? Okay. So now we have, that's Carvana. So don't love that. What's the long-term play here? See, I want to be very clear. Fundamentals in the very long term, I don't think you can buy puts long enough. You know, it's the stock's just not going to trade on fundamentals. Who looks at this? You know, we look at this, but in the short term, this doesn't matter. What matters is that they survived bankruptcy. They've been up since then. Then you get a tailwind. When a stock gets a tailwind, what happens? It keeps going up. It's the same thing when a stock gets a downtrend. So look at a company like Tesla, okay? So Tesla's in a nasty downtrend. This is very shortable. Tesla is as shorted as, I think, Chevron and Exxon. Like, those are your top 3 most shorted stocks. Do you think that would ever have been the case? That the top 3 shorted stocks would be Tesla, Chevron, and Exxon? Yeah, that's where we sit. So if those are your top 3 most shorted stocks, you know, by actual value, then, yeah, here it is. I have it. Tesla, Chevron, Exxon. Oh, that's crazy. Then it sort of reiterates this downtrend. And it takes proving an uptrend, maybe, you know, guidance or, I don't know, rate cuts or whatever, to basically create a short squeeze, reverse that, and then you create a longer-term uptrend again. That's when people get excited again. But you have to kill the short trajectory first, and that's tough. That's definitely tough. Wow, look at that. Costco, $7.34. That's another one. Like, you have to look at it like, you go, Costco, ridiculously overvalued. Wingstop, insanely overvalued. You know, Carvana loses money. It's a bad business model. I think it's a horrible business model. They just don't make money. How long? They've been around for like 13 years. They still can't make money. They have cash flow because they're liquidating. But, you know, stonk up. So, again, when it comes to, and I have to sometimes catch myself on this, I can't make, you know, like trade bets on fundamentals. You know, it's like you can't go in and, oh yeah, the fundamentals are horrible, up 28%. It's almost like the more stupid it is, the more it makes sense. So I think that's very interesting. Margins bottom. Let me see if you're right. I don't know if that's fair when you're liquidating to call it a margin bottom, because they're not really acquiring new, as far as I can tell. I mean, how much inventory do they acquire? I know they basically flip cars, but that would be very interesting if this says. This is the 10K, so it should say. Inventory. That's gonna take a little while to click around and find it. It is interesting. I mean, I'm sure they bought some cars because they have to. You know, you can't only go off inventory, but the inventory has been collapsing. I mean, the balance sheet says enough. Yeah, optimizing our inventory selection. Okay, whatever. Okay. So, is that a sign of a bubble, Kevin? Unwarranted valuation, or is that just stock market? Yeah. That's a really good question. What's the difference? You know, I know it's easy to just shout back and go, oh, it's all a bubble. But, like for example, Nvidia, those are warranted numbers. You know, like from a fundamental point of view, I look at Nvidia, I go, this is $600 to $700 reasonable. Okay, so what? It's 100, maybe $200 more. Okay, like that, I see that as it's not horribly unreasonable. You know, as far as something like Carvana, I mean, yeah, look, I think the long term will always prove out the truth to where if Carvana can't get their act together where they can actually make money, then the long term will punish them. But, you know, at least in the short term, it's gone from $4 to $50, and it's like a 10x, you know? It's kind of wild. Now, the odds of somebody actually having bought at the bottom, as opposed to having held and made a crap load of losses, and then just get some of their losses coming back, well, you know, who knows. But yeah, I mean, it's a company from a fundamental point of view I can't own as a longer term investor. So, right, net margin at Nvidia is 55%. Look, let's be clear. Nvidia's margins will go down. I mean, the company said so themselves, but they're still amazing, right? Nvidia had 40% margins before the AI craze. I'm talking like net. Like, their margins have always been quite phenomenal. In fact, better than AMD. You know, AMD was at like 20% net margins when Nvidia was at 40. So Nvidia's always had that sort of strong pricing power. And that's what's attracted me to them as a pricing power stock. Now, I think some of the move has been pretty wild here recently, but you know, it's still a big holding of mine, and so I don't want to come across as negative on it. They actually make money, which is remarkable. So what else? What else? Well, we got the bell coming up. Let's take a look. Am I thinking about buying or trading Palo Alto Network? Yeah, I mean, they had a little poopsie-doopsie there after earnings. You know, they still got a little bit of a peg on them. But look at how that almost played the fibs. Look at that. You were breaking out of the 348 fib. The current fib we've got is 264, and it almost looks like it bounced there. It closed like right above that. Pretty remarkable. Let's get the bell.
But there it is, right there. I mean, IBM and Google, certainly they're amazing companies, but what do you build everything on? You build things on Grace Hopper, you build things on the N200 or the M1, you know, the H200 or the H100. I just want to applaud Jensen and applaud McDonald's for watching, but this is what's going on all over America. Right now, you think that the other guys can possibly risk not having this?
That's a great way to help people explain what's coming.
Yeah, and again, if someone says on this show, if I say something on this show that is not responsive, I correct immediately. And McDonald's is a terrific company. And Contensi, by the way, those numbers were amazing. I have no idea why people thought those numbers were big. Yeah. No idea.
Let's get the opening bell here. As you can see at the big board, it's Madison Square Garden Entertainment celebrating the Harlem Globetrotters at MSG tomorrow. At the NASDAQ, Lotus Technology, a luxury EV maker, celebrating a listing today via SPAC.
EV.
Oh, SPAC. No. No. Lotus Technologies. I don't even see it yet. Lotus. Don't see it. I guess you'd have to see what their SPAC listing is. Let's see here. Lotus Tech SPAC. Lot. Oh my gosh, like car lot? Lot. Halt. This is crazy. So it's probably $10 as its SPAC valuation, which $10 is usually already a scam for a SPAC value. but everybody does it. You know, some SPACs do well, but it's further and few between. Okay, so let's see how the day moves here. So we've got Square. Square's moving up here on its 20% move. I still think it's incredible that Nvidia makes more money in a day in cash flow than Square makes in a year. But then again, I mean, these are different worlds, so maybe it's just not a fair comparison. But, oh well. So, Carvana's pushing. A nice green candle here. You've got TBD there on Palo Alto. Meta up another 1, 2, 3. Nvidia up another 3%. It continues. The craze continues. Wow, it's remarkable. When does it end? Never. It goes up forever. It will never end. Until it does. So, trade desk down 28 bips there. Pre-market. Microsoft up almost another %. The Q's up 0.5% here. Etsy's down a bit. Sunrun's down a bit. Affirm's up a bit. At the ups and downs here. Let's look at the wider movers. So, yeah, there's the Rover one, Block, Rocket Mortgage beat on their numbers. There's Dell again, another 2% for Dell. I don't know. I've been pretty curious to see how Dell's earnings are going to go. They seem pretty excited and shout out their tailwinds pretty well. Warner Brothers apparently hit its low, down 10%. I wonder what happened to WB. Let's see. WB, Warner Brothers, WBD. Yeah, Warner Brothers now down 12%. And this is, oh wow, look at that downtrend. I'm gonna have to go out to the week chart on this one. You know, it's remarkable how you have, oh wow, this particular version of their company, Warner Brothers Discovery, was only public in 22. What a rough time to go public with a stock. Holy smokes. Dell, will Dell be delicious? Oh, that's a good one. Yeah, that's a $2 trillion market cap for Nvidia. Wow, look at that, 2.04, 815. I'm shocked. Very, very good. I mean, they have broken right through this 731 Fibby over here. Average candlestick putting him at 753 right now, but yeah, that'll keep going. So what's this? CrowdStrike. CrowdStrike's done well as well. They've really recovered past the Palo Alto Networks move there. Toll Brothers up another %. Wingstop 68 basis points again. It moves again. All right, I want to see what some more of the suits are saying. Okay, so we talked about this one, which was delaying to the summertime for rate cuts. Let's see, we continue to see the January inflation data as an outlier. Okay, see, that's interesting. We continue to see the January inflation data as an outlier and expect core PC inflation to fall to 2.5 year over year by the May meeting and 2.2 by the June meeting. We had previously expected a May cut because we thought 2.5% would fulfill the requirement included in the FOMC statement that inflation is moving sustainably towards 2%. However, it now looks more likely that the FOMC will wait to cut until year-on-year inflation is even closer to 2%. Yeah. We've therefore dropped the May cut from our forecast, but continue to expect cost cuts, they continue to expect rate cuts in June, July, September, December. Again, they missed November there. I mean, they must have, I don't think they accidentally missed that. They would have had to have seen that. Okay, then let's see here. Oh, Intuit came out with earnings. How are they doing? So Intuit down about 83 basis points, so pretty nominal here. Let's see here. If I look at Intuit, Intuit sees Q3 revenue up 10 to 11%, reiterating guidance. I think that was a little softer than expected. Less hope than expected there. Okay. Credit Karma headwinds. Maybe too much staff or something. I don't know. Interesting. Okay, so let's see some other suit commentary here. So that was Goldman. We have SocGen. SocGen. You are talking U.S. exceptionalism. Upside surprises in U.S. ISM, labor markets, and CPI data for January, all released this month, have left some scars on the market. Forecasts of Fed easing have been trimmed back. It's been the resilience of the U.S. consumer, supported by strong savings after the pandemic and tight labor market, that has underpinned the remarkable resilience of the economy. Wow. Yep. Okay. So then we've got, how about... Let's take a look at another one here. What does Barclays have to say this morning? Oh, Barclays. Today's calls. What do we got? Big tech is increasingly critical to the SPY earnings health. Big tech delivers year-over-year EPS growth. Low EPS surprise. Big tech is single-handedly keeping the SPY margin inflection story alive. Wow. Yeah, because margin's going up as opposed to falling. Adoption timelines are shortening for app and infrastructure solutions. Oh, that's interesting. Maybe talking about people getting back into like Snow or CRM. I wonder if that's true. Let me see. Snow. But they've done okay, haven't they? I think they've done fine. Yeah, they've performed pretty well in even just the last 6 months. CRM, yeah, same thing. These have all been fine. That's interesting though. This idea about maybe a shortening sales cycle. You've got DraftKings upgraded to overweight. Quick reminder: the new house hack video, I did a sort of a house hack income update video on the main channel, and then I'll follow that up with another video on the house hack channel itself soon, so stay tuned for that. But you'll get to see that. You're welcome to go over there. If you have any questions, you can either always ask here or there. Anyway, okay, so then we've got, let's look at, what about these suits? Not as much news at this time, but inflation will be the key risk to a breathless market. Historic day for the U.S. stock market. 3 major indices closing at record highs on Thursday, but spread apart by lower breadth than usual. Lowest participation of stocks getting a 2% advance since 2020. So your gains are really concentrated on the few, basically, is the argument, or the larger gains. Yeah, there's a lot of talk about this. Where was my 2% gain yesterday? Yeah, that's what they're saying. More than 80% of S&P 500 names failed to match the 2.1% gain of the broad index. That's interesting. So the index got 2%, but that was mostly concentrated. That's fascinating. Okay. Okay. All right. Let's see what else we have. Hood moving a bit this morning, says someone here in chat. Let's take a peek. Oh yeah, look at that. Hood's up at $14 right now. Nice. And then, how's SMCI doing this morning? That was fun to trade. Down 5-6%. Intuit now down 1.5%. Carvana went up to 44. Wild. Nvidia almost up 4.5% here. Dell up another like 4% here. Remarkable. And then Rivian's down again 9%. Holy crap. I think what you're seeing is like a selling basically of some of these banks. Wow. Wow, remarkable. Yeah, we did some analysis on Carvana already. It has to do with their earnings, but you know, the actual relative to expectations, the actual company operations, not very excited by, but in terms of beating their expectations, they did well. Okay, so we looked at Barclays, we looked at Goldman. Let's try, what does BOFA have for us this morning? Ooh, the Flow Show. What's the Flow Show, Mr. Hartnett? 2020's exceptionalism driven by a Wall Street, U.S. capital, right? Let's see here. U.S. consumers strong past 12 to 18 months. Global producers weak. Roles set to reverse in the coming quarters. Oh, that's an interesting phrase. Consumer tailwinds of excess savings. Yeah, well, I don't know. I mean, everybody's been talking about people's excess savings going away, and it has not occurred. Probably because, you now have real wage growth, right? And you have Super Tuesday coming up in a couple weeks. That's wild. We're already almost at Super Tuesday. It's remarkable. So, all right. Very well. So there we go. All car reviews compliment Rivian and state how it's their favorite EV. Can that help them become long-run profitable? I think they overspend on the car, but you know, maybe if they can scale that up, eh? I don't know. Anyway, all right, let's play the button, and we got to get to the course member live stream. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Well, there you have it. Thank you so much for being here, folks, and we'll see you in the next one. Make sure to go check out the HouseHack video if you haven't yet on the main channel. There'll be a follow-up video on the actual HouseHack channel a little bit later. All right, thanks, folks.